insurance, this is Tony Cañas, and today I want to talk to you about rising insurance salaries and why they are rising. This is based on an article in the Insurance Business America magazine. And I quote, "Employers often use the CPI to determine adequate compensation schemes and make cost of living wage adjustments. However, the past 12 months have been very unique in that the COVID-19 pandemic has triggered unprecedented fluctuations in the U.S. labor markets, characterized by job losses, wage freezes, and furloughs." And that sounds bad, and it is bad for the rest of the economy. But the interesting part is the insurance industry has proved incredibly resilient against those widespread labor trends. And then it quotes a good amount of things from the Aon Jacobson Group's semi-annual U.S. insurance industry labor market study. It's a mouthful. And it talks about how the insurance industry is holding strong from an employment standpoint compared to the general economy. And in fact, insurers have added almost 20,000 jobs since March of 2020. Which my CEO, Greg Jacobson, described as really remarkable. And it really is. Think about it. Like while the rest of the economy has lost many jobs, insurance has added almost 20,000 jobs in the U.S. The employment rate in the industry is up 1.2% in the last 9 months. And that is really incredible. And Greg also talked about how it's been really stable since the early 2000s. That our employment rate right now is actually higher than at any other point in history, even with all the efficiencies that have taken place when it comes to technology, and even with the COVID recession. Those positive trends, the magazine says, could have an impact on compensation, with some sectors of the industry handing out significant pay raises. And it's quite the contrary to the rest of the economy. Overall, the CPA has remained very low, below 2% since the start of the pandemic. Historically, it's often between 2 and 3%. So that was explained by Jeff Rader of the Ward Group, now part of Aon. Price pressures are likely to increase in the months ahead, and that is the very interesting part. So he's predicting, given the numbers that we're seeing, that salaries are likely to rise. And think about it, unemployment has remained really low. In fact, while the economy is sitting at 6.3% unemployment, insurance is sitting at 2.2%. We will likely see wage growth. And I am seeing, the reason I picked up this article to talk about is because this matches very well what I am seeing as I have conversations with friends in the industry and with clients and prospects. I'm getting a lot of people sharing how they've had big either in-seat raises, or many of them have changed jobs for significant raises in the middle of a recession. It is really amazing. So insurance continues to be an incredible industry to work in. It's held strong in yet another recession. And with unemployment within insurance continuing to be low, insurance salaries are rising, especially for those changing companies. So an incredible industry to work for. If you are looking for staffing help, that's what we do at the Jacobson Group. Whether it's permanent or temporary, we can help you find the right people. If you are looking for career advice, I provide a free service called chatwithtony.com, where I give free career advice, or what I call micro-mentoring, to any insurance professional. I look forward to chatting with you. Thank you for tuning in today. Hopefully this was helpful.